Welcome back to America's Commercial Real Estate Show. I'm Michael Bull. This segment is brought to you by buyproxy.com. That's BIPROXI. This is a new service. It's a listing service for commercial real estate. You can find properties, you can list properties, and there's no charge. And then for a fee, they have some marketing services. Do check them out. Well, today we're talking about the expectations and market realities in real estate 2019. This is an annual report that's put out by Situs RERC, by the National Association of REALTORS, and by Deloitte. It's a great report. We'll have a link to the report below. My guest is George Ratiu, and he's joining us on Skype. He's Director of Quantitative and Research and Commercial Research at the National Association of REALTORS. And George, we're talking about the outlook in the first segment of the economy and commercial real estate in general and interest rates. And I think a lot of our listeners and viewers around the country, a lot of them have certain property types they're more concerned about. So what, in your report, what do you guys feel about the office market moving forward? There's certainly been a lot of changes going on there.
You're absolutely right, and in fact, the office market has performed surprisingly well. I would say it's probably one of the underdogs of this recovery. What do I mean by that? When you look at obviously the post-recession environment, office properties suffer from the highest vacancy rates. However, with employment over the last roughly decade having added about a little over 21 million net new jobs, and the biggest chunk of those being in professional and business services, a lot of obviously office using sectors, we have seen a resurgence in demand for office space. Interestingly enough, both in the central business district, so in the CBD, downtown core, but also we've seen a revival of the suburban office space and vacancy rates towards the tail end of 2018 had dropped to about 10%, so a significant recovery. We expect employment to continue on a strong upward curve in 2019. And with that, we expect obviously demand for office spaces to remain positive, net absorption to remain positive. So I think the outlook for office is quite bright. The one thing I will mention is that during this cycle, what we have seen quite a bit of change in the way that tenants are utilizing space. We've seen a lot of space efficiencies on the part of tenants. We've seen move to quality. So a lot of tenants during the post-recession environment move from their current trends to better ones. And we've obviously seen a lot of technological impact in the way space is used.
Yeah. Well, it sounds like a good outlook. Let's talk about industrial. That seems to have been the real darling sector. But, you know, it seems like industrial in the past, I've been in this business for a long time, we didn't see a lot of spec building as kind of a conservative sector, if you will. But now we're seeing a lot of spec building in industrial. What's your outlook there?
You're absolutely right. Industrial generally tended to be the less attractive, the less glamorous sector, right, of core property types. Traditionally, well, during this cycle, it has benefited from sort of a double upward punch of one, increased international trade, which has boosted demand for warehouse space, logistics centers, particularly along the coast. You know, you think of Inland Empire on the West Coast. On the East Coast, we've obviously had a big push as a result of the Panama Canal expansion for several ports, starting with Miami, Jacksonville, Charleston, Norfolk, all the way up to Baltimore and up into New Jersey, to capture a lot of the Asian traffic for East Coast markets. So with that, coupled with the obvious increase in electronic commerce, the Amazon effect, which has pushed demand for distribution centers, for suburban warehouse spaces, where companies are looking for that last mile leg, right, to get their product to the consumer in as short a time as possible. So the confluence of these two major forces has resulted in demand for industrial properties reaching new levels, and with that, to your point, obviously a lot more speculative space. Vacancies basically are now under 5% nationally. And with that, obviously, cash flows have been quite positive. In fact, the interesting development in this space right now seems to be centered on these multi-story warehouses, right? We just saw Prologis open a 2-story warehouse where semi-trucks can drive up on it. There's another project in the pipeline in Brooklyn. They're looking at putting 4-story warehouses, right? So it's an interesting, reaching for the sky, in fact, in this sector. And frankly, we expect that demand to continue. Early during this cycle, the supply didn't come on as strong, which has favored, obviously, existing landlords. That's obviously catching up. But I think the sector still has quite a bit of room to grow.
Okay. And you can't rule out, as we talked about earlier, some sort of recession in 2020. So might that have an impact on industrial if the economy slows down a little bit?
Well, that's obviously a possibility. In fact, the recession would likely have an impact on not just industrial, but some of the other sector. The big question is what is likely to drive this recession. No two recessions are alike. So for a lot of people who look over their shoulders to 2018, 2019, expecting the next one to look like that, it's very unlikely to be the same way. So the big question there, some sectors are going to be impacted a lot more. Similarly to the last recession, multifamily was not impacted as strongly as office, retail. Likely in the next recession, we're going to see different impacts on property types, industrial included.
Yeah, and I'm glad it's not going to be like the last one. That wasn't very fun for our clients and developers we work with. So let's talk about retail. Everybody's concerned about retail. You guys put your heads together. What do you expect moving forward?
Well, I think retail has been one of the sectors that perhaps has been overplayed on the downside, right? So the big headlines of the last few years is retail is dead, the Armageddon of retail. Well, the truth is there is a part of retail that has certainly been suffering. When you look at department stores in particular, we've seen a lot of closures. We've seen Kmart, we've seen Sears. Sears has gone through a much publicized bankruptcy this last year. In addition, we've seen big box stores like Toys R Us go through bankruptcy. So obviously a lot of change. And in fairness, a lot of the sector, particularly in terms of malls, was overbuilt during prior cycles. So not surprisingly, we've seen what some people call a right sizing in that. However, there's a lot of nuance, as you know, to the retail space. We have everything from power centers, lifestyle malls, down to neighborhood centers, outlet malls. What we've seen is along these nuance lines, quite a bit of growth, in fact, in neighborhood shopping centers, particularly those anchored by grocery stores. In fact, I think this cycle of real estate has been marked by a renaissance in grocery stores. We're seeing such wide variety, from your traditional Albertsons and Kroger's and Vons on the West Coast to obviously Whole Foods, which has gotten obviously a lot of infusion from its acquisition by Amazon, and all the way down to smaller players, which traditionally were under the surface but have come to the fore. You think of Aldi and Lidl, the German grocery chains that have made big pushes in the U.S. during this cycle. And moreover, for a lot of markets, particularly those that have experienced strong economic growth during this cycle, even traditional malls have been doing quite well. The change there has been they've reshaped themselves as experience destinations. We've seen a lot more restaurant space. We've seen even some of the retail environment itself shape more towards an experience. And as a result, consumers have obviously responded to that. And traffic at malls in strong markets has actually been up. And what we're seeing is online businesses begin to actually open brick and mortar locations. I mean, you think of Amazon, they've opened several bookstores this last year. I think of companies like Blue Nile, purveyor of jewelry, which was an online company for a better part of the last 2 decades, started to open stores in malls around the country. So I think, and based on our report, our view is that retail is is actually looking much better than the headlines would have suggested over the last 2 years. And our expectation is for rent to be positive in 2019, nationally speaking, across the board.
Well, great. Well, all my retail brokers here are clapping, and they're glad to hear that, and our clients that own those types of properties. Well, we're going to take a short break. When we get back, I want to ask George about the multifamily market. It's certainly been a hot market. What should we expect moving forward there? And then hospitality, hotels. What should we expect there? Are we starting to see a change there? Stay with us. I'm Michael Bull. This is America's Commercial Real Estate Show.